Hey traders, this is Ron Hayden at Market Tamer. Happy hump day. Hope you guys had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues should always be addressed with your financial advisor. We'll start here with the SPY, the spiders, down 0.61% today. We're still above the 20-day EMA in red. Therefore, the bulls have the edge on the daily chart. Remember, that red line is 20 days worth of data, but it's trading days, not calendar days. Therefore, it's about a month. So the month trend here is still pointing higher. If I bring in the diamonds, they didn't do quite as well. They're down at the 20-day already. So over the last 3 days, we're starting to pull back a little deeper. If we get below the red line, target 200-day in purple, 50-day in orange. We take a look at the Qs. They were down over 0.5% as well, but the 20-day in red, 200-day in purple are both touching right around 171.72. We're almost about $2 ahead of that, or above it right now. So again, the three majors, bulls still have the edge. However, if we go to the IWM and I zoom in, we cut through that red line like a hot knife through butter, and volume picked up. The IWM is not the most important index of the major fours, the spiders, the diamonds, the Qs, and the Russell. But this is a big yellow flag now that's being waved. These guys have rolled over. There was no bouncing. We cut it. Target 50-day. Right now that's around 147. That would be $6 lower or twice today's move before initial support would come in. So this is definitely a little bit of some clouds out there or a bad omen. If we look at the MDY, similar situation. They were down 1.35%. They were bouncing a little bit, but today hot knife through butter. Target just down maybe 330. That's $13. Again, it's 2.5 times today's move. Now, if I take you to some ETFs, how about the semis? 1.69%. Lows of the day, right at the 20-day. If the 20-day falls, 200-day in purple, 50-day in orange. Remember, the purple and the orange are institutional moving averages. How about the transports? They already are spending their second consecutive day below the 20-day EMA. Target 50-day down around 178. Still $7 lower. And then if we go XLF, the banks, I'm going to have to zoom in here really close, very barely closed below their 20-day EMA, which was 26.28. We're at 26.25, 3 cents. That's not much, but it still is a break. What we're seeing here is the banks, transports, the Russell 2000 are now breaking support. The three majors, SPY, diamonds, Qs, not yet, but yellow flags are abound. So be careful, keep an eye on it. Again, if practice in a paper trading account what protective puts are, what covered calls are, and how they can offer some insurance as a stock may drop. Now, Abercrombie had a big move today, ticker symbol ANF. We gapped up, we're into the gap, so the gap is over. And the upside here to previous resistance is around 28. Yeah, it's about 10% higher. And there was big volume today, over 20 million shares. But I don't like playing it when a stock has just gone up 20% in one day. To me, this move is over from a probability perspective. I do not like the reward to risk ratios. However, if I go back 5 years, we cleared 27.50. Actually, we could call it 28. We clear about $28 on a closing basis. The target then becomes up here in the mid to upper 30s. That could be a new one to potentially play. But right now, to me, Abercrombie's, it's all over. There's no good probabilities here for me. How about TSG, which is the STARS group? Never traded it. I don't even know if I've ever looked at it. But today we had a spike in volume, 7.1 million shares, where the average volume, might be in the neighborhood of 1.5 million or something. And this has been such a move lower. You think about it, mid to upper 30s. You were just nearly at $15 yesterday. If I zoom in, if we can start closing above that high there, which was $18.98, let's say $19, still another 10% higher, right? But above 19, we now close above a previous lower high. Now we're putting in a higher high. There is so much of just ebbs and flows here. There wasn't a whole lot of pausing. I could make an argument and say once we get above $19, target's 25. That's a huge move for such a little stock. I would also consider the 20-day EMA as a potential trailing stop. And then we'll look at two biggies here. We'll look at Google and Facebook. Google, zoom in. It broke above the previous high around earnings, and then it came down and flirted with the 20-day in red. And it's sort of bouncing around. But Monday, Tuesday, Wednesday now we're staying above the earnings move higher. So 1200, 12 and a quarter is the target, and then back up to the previous highs around 1270 or so. So Google's hanging in there. And Facebook, if I zoom in, we got above the 200-day, then it was a very controlled pullback on light volume. Now the up days are beating the down days, and we're cutting through the 200-day moving average, which I talked about earlier in a video this week. Now we even have closed above the previous highs. So target, I'm going to say up near 190, and then the gap fill up here. It doesn't mean the stock's going to get there, but those are upside targets. And given how the 20-day EMA in red's been working so far, back towards the end of January, mid to late February, I think it's another good one to consider following as a swing trade, end of day trailing stop. But that's it, folks. Have a great day. I'll see you in the next video. Take care.